again, good morning, good evening, good afternoon. Mike, the FX boss here again. Welcome to the next lesson, which is part 2, right? Part 2 of the how to trade trends inside the market structure. Okay, never forget, this is Forex course 101. My goal is to bring you from zero to a millionaire trader in 3 years. Alright, and if you didn't receive the free manual that you can download and print it out, you know, like this, so it's very, I hope it's going to help you to study and comprehend. Send me an email, alright? It's for free, it doesn't cost you a cent. Send me an email to mikefxboss@gmail.com. And if you didn't receive the next one, which is the, so this is the manual here, alright, professional forex trader course. Okay, that's the manual. Today we're going to talk about still, so we are trading time frame, higher time frames, how to trade trends inside market structure. We are going to, whoa, it's just one page. And the next one is this one, you know, if the little book of trading secrets. Okay, who is this beautiful guy? Who is this beautiful guy? Alright, again, it's for free. Just visit the website www.fxbossfx.com. Alright, again, it's for free, it doesn't cost you a cent. Okay, so, and if you have any questions or homeworks to send me to, again, to the email, alright? And for extra webinars, seminars, we are running currently the Fibonacci Mastery course for 4 weeks. And then next week we have the how to build a trading system, alright? That being said, oh, and if you want to follow me also, you can follow me to have more lessons, you can follow me on Dukascopy Academy. Alright, so if you go to playlist or if you go to live, alright, if you go to live, this year we have here, okay, so it's this one right now, it's trading support, resistance, pivot points, how to trade. I believe it's this one, how to trade support resistance inside a trend. Alright, but otherwise if you go to playlist on YouTube, Dukascopy Academy, you can check Forex and Crypto 101 is this year, but it's exactly the same from the last year. It was full systematic Forex course. Alright, so those are the same lessons, okay? Not mandatory if you want. Alright, so moving forward, so today it's part 2, and what I must understand is how, so last lesson we talked about how to chart, right? So the market structure, also called the market wave, on any time frame, I need to spot, not on the monthly, right, but on the weekly, daily and lower time frames, I need to spot the change in the short-term trend. So in a down market wave, we are going to have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Then the market is going to stop making lower lows, lower highs. It's going to start to retrace, very good. Higher high, higher low, higher high, higher low, higher high, higher low. And then it's going to stop retracing and it's going to start to do what? Very good, the next extension, right? So lower low, lower high, lower low, lower high, lower low, lower high. Okay, so this is the basic knowledge about how to chart the market wave, how to chart the short-term trends, and how those two, how the short-term trends are a structural part of the market wave. Okay, now this is one. It gets tricky. Okay, it gets tricky now, the understanding to set stop loss levels. Okay, now please focus, you know, turn off your cell phone, WhatsApp, you know, Facebook. Okay, now this is very critical for you to understand. Let's say that we are going to trade the short-term trends. Market wave, it's easy, right? Market wave, the green one, it's easy because the best entry is end of retracement. So if I would trade the green, I would monitor the red, and once the red starts to, in this example, start to make lower low, lower high, lower low, once we have a confirmed downtrend, this is not a guarantee, this is an indication that we stopped retracing and now we are start extending. So it's extension, retracement, extension, right? And if I am trading, if I'm shorting the green market wave, stop loss goes up in here. Alright, that's the, oh yes but, there is no yes but, this is the only appropriate stop loss on the market wave. Stop loss on the market wave, the green. Okay, we covered this already in the previous lessons. And okay, for enough, just quickly, what's the logic behind? If I short the market in here, and remember I'm shorting the green, not the red, I'm shorting the green, so if I put my stop loss on this green high, try to see if this is too complicated, we're going to get rid out of this one, okay? Better? But the signal to enter is the change in the shortened trend. So if I enter at the red, and if the market makes higher high, whoops, not this one, if the market makes higher high, higher low, higher high, and stops me out in here, remember you don't see down in here, right? This was the entry. What did the pattern change? Meaning if I do something like this, so extension, retracement, and we are right now we are here. If I put the stop loss up above this high, did the pattern, so in the market stopped me out, I have a losing trade, a loser, did the pattern change? Exactly, very good. No, it didn't, right? This is the whole logic why when we are trading the green, the market wave, why stop loss goes up in here. So this would be the relevant high of the market wave, this would be the relevant low of the market wave, and this right now it's not a relevant high yet. Alright, why not? Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, higher high, higher low, higher high, higher low, higher high, and we are here right now with the red shortened trend. Alright, so this is the rule. Only and only when the market breaks this low on the left for 1 pip, only and only then this high becomes the next relevant high. Okay, so what does this mean? This means that if I'm entering the trade shorting the green in here, stop loss goes up in here because this is the most relevant, confirmed relevant high. Does this make sense? It's a confirmed relevant high, but as soon as possible, lower low, lower high, lower low, lower high for 1 pip. Alright, 1 pip, and now I'm going to short the market in here. Just an example, I'm going to short the market in here, then the same stop loss doesn't go up in here anymore, goes down to here. Does this make sense? Why? Because this is the next market wave extension leg confirmed. Make sense? No, it does make sense. If this is the next extension leg and the market makes higher high, higher low, higher high, higher low, and stops you out in here, did the pattern change? Good question, right? Think. It's all pure logic. Up in here we defined that if I put my stop loss prematurely, right? If this would be my stop loss, and again, look what is going to happen. Just focus on the green. I'm shorting the market at the circle. I'm shorting the market. I'm shorting the pattern. We have two patterns. One is market wave, also called market structure. The second one is the shortened trend, the red. So if I'm shorting the green down in here, and if I put my stop loss above this high, and if the market stops me out, did the pattern, was the green violated? You know, if this is the market wave going down, right? See how the market wave was falling? Relevant high, relevant low, relevant lower high, relevant lower low. So if I short the market down in here, shorting the green, and if I put my stop loss above this high and the market stops me out, did the market wave pattern change? Meaning, was this pattern violated? Meaning it's not valid anymore? No, exactly. But what if the green, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, makes a new low down in here, okay, and I'm going to short the market again down in here with the counter trend line break, and same scenario. Now I'm going to put, before it was in here, now I'm going to put the stop loss up in here, and if the market goes up and stops me out, would this break the market wave pattern? Try to visually, look at the chart, try to visually understand. Yes, it would, exactly, yes, it would. So, see in here, this would be the example. Give me a second. All right. Maybe not on the monthly. If you go on the weekly, and remove indicator, remove drawings. All right. So this is now NZDCAD weekly chart. All right, and market wave, the green, right? Extension, retracement, extension. Now we are here, all right, and you don't see the future. Maybe a better example, if we stay in here and go on the daily. All right, can you see the change in the short-term trend right now? Okay, very good. So extension, retracement, extension, and up in here, right? You don't see the future. You don't see the future. So if I short the market up in here, just an example, not that this is the correct trend line, just an example. If I short the market, if I sell in here, if I put the stop loss up in here and the market stops me out, would this break the market wave? That's the relevant high, that's the relevant low, that's the relevant lower high, that's the relevant lower low. So if I'm shorting the market here, look at the mouse, and the market goes up and stops me out, this is my stop. would this break this down market wave? Somebody saying yes, it would. It would not. It would not. You still have the relevant highs and lows in place. Don't confuse relevant highs and lows with extension, retracement, extension. It's not the same. Okay? So if this is the relevant high, now if the market would push up, 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 bam, now we don't have anymore a down market wave, we have the first break of the high. Alright? So this now becomes the first up extension leg. Does this make sense? Don't worry, it's going to take some time, alright? Just try to understand the concepts and how charting works, and when the high becomes a relevant high, when a low becomes a relevant low. Alright? So most of beginner traders or intermediate traders, you know, they would see higher highs, higher lows, higher highs, higher lows. Then would be the change in the short-term trend. Okay, they would, in their mind, they would short the green, but they would put the stop loss in the wrong place. Okay, shorting, remember, the only appropriate stop loss, it's on the pattern traded. Every pattern that you trade, uptrend, downtrend, market wave, short-term trends, consolidations, crowns, head and shoulders, candlestick formations, whatever, Fibonacci's, every pattern has its own rule. How to enter, when to enter, where to profit take, and where goes the stop loss. And we wrote down already that what makes the money is the appropriate level of the appropriate stop loss. Most of you lose, not because you're wrong on the direction, but because the market stops you out and then goes into your direction, right? Did this happen to you? You know? So stop loss goes on the pattern traded. If this is the relevant high, this is where the stop loss must go. Okay? So most of us, we are thinking one pattern, we are thinking that we are trading one pattern, but we put the stop loss on another pattern. Okay? If my stop loss is on the short-term trend, one last time, the market can go up, stops me out, but the short-term down market wave, not short-term, sorry, the down market wave is still intact. Can you see it? Your stop loss was on the retracement, not on the market wave. Okay? Only and only when this makes a lower low, then this high becomes the relevant high, the next lower high, even for a pip, sure enough. Okay, so the next market wave, it's down extension, retracement, down extension, retracement, down extension. All right, study the charts, send me questions if you want. Okay, study the charts. All right, now that being clarified, hopefully. So this is the short-term trend. All right, and lower low, lower high, lower low. Give me a second, everybody. So lower low, lower high, lower low, lower high, lower low, lower high. Okay, there you go. Now we need to talk about two things. Question number one: if I am here shorting the market and I don't have enough money in the account, okay, can I short the market wave? Meaning, if I'm shorting the market, if I'm selling the market in here, okay, and I have a choice to make, I can put the stop loss above in here, or I can put the stop loss clone, I can put the stop loss up in here. Agreed? I have a choice to make, right? I can put the stop loss on the short-term trend high, the red one, or I can put the stop loss above the market wave, the green one. Alright? That's all the same. No, it's not all the same. But let's go step by step. Number one, if I have, it's just an example, but try to understand what it's a concept. If I have a $100 account, just an example, or 100 euros, not 100 Bitcoin too much, but anyway, if I have, or even 1,000 euros, $1,000, you know, and this stop loss would be what, 50 pips or points, not to get into the conversation about pips and pipettes, you know, it's frustrating, you know, you don't get it, and let's call it points. This would be 20, 50, 100 points, pips if you want. Alright, now market wave on the daily would be 4,000. Sometimes, you know, when you calculate, you know, in the Excel, when you calculate the lots, the volume, you know, so just an example, if I have $100 account, now can I risk, meaning stop loss, can I risk 0.1 volume, meaning lots, right? And just an example for you to understand the concept. You can then study and rearrange the numbers in any way. So stop loss is 4,000 pips away, pips away on the green market wave. All right, just an example. So I need to go to the calculator and say, all right, so if I have $100, okay, and the stop loss is 4,000, so I'm going to divide 4,000 points or pips if you want. All right, then divide that 0.1. Okay, and sometimes it's in reverse too. You need to do the confirmation. Okay, so I have $100. Now if I'm going to enter with 0.1 lot volume, every pip the market goes against me is going to count a loss, right? 0.1, 0.2, make sense? So I'm shorting the market, I'm selling, but the market goes against me, and the volume of my position is 0.1. So if the market goes against me for 1 pip, I'm going to be in a loss. 0.1 minus 0.2, 0.3, agreed? So, and let's say that I have, so it's 4,000 pips, so it's not divided, it's times 0.1. What's the number? I don't know, it's out there. It's 400, right? This, I know it's a stupid example, but just try to understand the logic. If me and you, if we don't have enough money in the account, this is a stupid example, I know, but I cannot risk the volume of 0.1. Right? What can we do? We can go with 0.01, right? So it's 0.01, it's 4,000 times 0.01. So it's 40, right? I can short the green, the market wave on the daily chart, on the 4-hour chart, on the monthly chart, whatever, but I cannot short it with 0.1, I can short it with 0.01, right? No, you can't. No, you can't. Guess why not? No, you can't. This would be foolish. You cannot trade like a professional doing this kind of stuff. Why not? If you have $100 in the account, you're risking $40. How much in percentage are you risking your account? 40%. Don't do this. Oh, but it's $100. Don't do this. Repetition is how we learn. If you do this stuff 1, 2, 3, 4 times and you get into the habit of doing this, then it's going to be hell on earth, believe me, before you change the habitual way of what you're doing. Don't do this. Be very careful. Okay? So money, it's an issue on the stop loss levels. Right? And then logically somebody's going to scream and yell, oh, what boss, what if I don't have enough money? You can go trading the lower time frames, alright, because every single time frame has its own market wave and its own trends. Okay, so you need to have the 4 time frames. Don't overlap charts, this would be a mistake. Okay, or you can enter trading the short-term trend. And some of you might be arguing right now, but I don't like the market wave, or I don't like the short-term trend, I've lost on the short-term trend, I've lost on the market wave, or any other variable. I'm sorry to tell you, but you don't choose. Fair enough? We don't choose. We cannot, I mean, it's not on us, makes sense? I can say in my mind, like, oh, I don't like this and that. What if I don't have enough money? Make sense, everybody? We don't have to choose. We need to understand the math and the logic behind, and I need to understand if I'm going to do some stupid things on the chart, I'm going to lose. Don't do this, make sense? Invite your significant other to a nice dinner for $100. Don't put 40% risk and waste your time and money, okay? Now, a little bit less complex is trading the short-term trend, right? Now, the stop loss theory works exactly in the same way as the pre-market wave. What does this mean? If this is the short-term downtrend, and again, not this one, but the red one, lower low, lower high, lower low, lower high. How many you have? 1, 2, 3, 4, 5. We entered the 6th. 1, 2, 3, 4, 5. All right. So we enter at the 6th. Counter trend line breaking here. All right. So here is where we are shorting the market. This is this, alright? Should the stop loss go on the most recent high of the short-term downtrend, or should the stop loss go on the previous high on the short-term downtrend? Previous, not the most recent, not the most recent. Why not? Same logic as per the market wave. If the market makes higher high, higher low, higher high, and stops me out on the most recent high, would this violate the short-term downtrend? Yes, it would. No, it would not. Chart, everybody, relevant high, relevant low, relevant high on the short-term downtrend this time, relevant low, relevant high, relevant low. The market should break the pattern, it must break the relevant highs and or lows of the pattern. Let's write this down. For the market to break the pattern, it must break the relevant highs or lows of the pattern, not any high or low. Does this make sense? So if I put the stop loss on the most recent high, this one on the red, this would be a mistake. Make sense? If I enter at the counter trend line here and I do this, this is a mistake. Alright, higher high, higher low, bam. With the premise, sure enough, that the market didn't make the low yet, right? Exactly, same story. Once the market makes on the short-term downtrend this time, lower low, lower high, lower low like this, then sure enough this becomes the next relevant high, and then if you're going to short down in here, you're going to put the stop loss again on the previous high, right? Okay, take profit. We didn't learn anything yet about take profit, but whatever you do, go for 1/2 risk reward ratio. All right, whatever you do. So if you go here right now and we go on the daily chart again, okay, if this would be, or here, let's make another example. So we are going to, let's make a trading exercise. All right, delete, 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 delete. Okay, so yes, you can use this on all currency pairs and all time frames. So we are on new NZD CAD daily chart. Remember this, it works on all the time frames the same. Okay, we're just looking at the daily because it's slow, it's not moving much. Okay, now question number one. Now that the market made a lower low compared to the previous low, is this high up in here the lower high confirmed? Yes or no? That's question number one. Now that we have this low down in here, this low, see the mouse moving? It's down, it made a lower low, it's confirmed, you know, it's a low compared to the previous low. And what is going to confirm this low is the change in the short-term trend. Okay, now that we have a low that's confirmed and the market start retracing, is this high confirmed as the next lower high of the pattern called down market wave? Yes, it is. Very good. Question number two. Are we in an extension or are we in a retracement right now? Talking about this one. Are we in an extension or are we in a retracement? Retracement, boss. Very good. So what we're going to do, we're going to monitor and trying to find the change in the short-term trend, all right? And so how you find you monitor relevant highs and lows. Low to high, high to low, low to high, high to low, low to high, but there is not low to high, high to low, low to high. Can you see it? Can you see that this is the relevant low on the short-term downtrend? This price action until here, it didn't change the short-term trend yet. Oh, but it's making lower lows, lower highs. Yes, it is making, but those lows are not relevant. Does this make sense? Because this is the relevant. We tend to confuse apples with bananas. If I can see that this is the relevant low on the short-term trend on the red, if I can understand that this is the relevant low because this is me charting highs and lows, the relevant ones, so I must understand that this price action, those are lows but not relevant to the short-term uptrend. Speaking a different way, this is the up extension leg of the short-term uptrend, and this is nothing more than a retracement on the short-term uptrend. Does this make sense? this is this. Alright? This is this. If and only when the market breaks this low, then this sucker in here, the red one, it's not valid anymore. So let's see what is going to happen. Not yet, not yet, not yet. I'm going to get rid of the... So here, this one broke. Alright? This is the relevant low. I mean, this broke the relevant low. So now, if I short the market in here, alright, I have a choice to make, agreed? I can put the stop loss. If I'm trading the green, I can put the stop loss above the most recent relevant high on the green. But if I don't have the money, I'm not going to tell you, I'm going to ask a question. If we are shorting the red short-term trend, that's a difficult one. That's a difficult one, you know. So the market broke low to high, high to low. So the market broke the relevant low of the uptrend, right? Up in here. Alright? With this low, the market broke the relevant low. Now, and if I enter in here, should my stop loss go on the stop loss number 1 or should my stop loss go on the stop loss number 2? Gosh, that's a difficult question. That's a difficult question, isn't it? It is a difficult question. Try to spatially understand relevant highs and lows. If this low in here broke this low and this low, I'm moving the mouse, this low violated the uptrend, should I understand this chart like every high and low it's relevant, or should I understand the short-term trend? Like charting, it's alright, charting it really doesn't matter, but should I spatially understand that this short-term trend is behaving like this, or should I understand that this short-term trend is behaving like this? That this is the down extension of the short-term trend because that was the relevant low from before. No, this has nothing to do with Elliott waves, no. This is pure price action theory or market wave theory. This is nothing to do with Elliott waves. Well, what's the difference? If I understand that every high and low is relevant, then I should not enter shorting the market in here. Why not? Because the market made a higher high, right? If the red one was the trend, high, low, lower high, lower low, bam, higher high. So I should not shorting the market because it made a, make sense? It made a higher high. It's not in an uptrend and it's not in a downtrend anymore. Now if I understand this downtrend like this, that this is the extension leg, I short the market in here and I'm going to put the stop loss up in here, then this is a different story. Can you see here what happened? Can you see it? And bam, here too. So this will be a losing trade on the red, on the short-term trend. If we would have the stop loss on the green, would we be safe? Yes, we would, right? So in this lesson there is another key point. Trading the market wave is safer in terms of being safe. It's still a probability game, you can still lose, but when bulls and bears fight for control, many times we get, me too, don't worry, we get stopped out on the shortened trend once, twice, 3 times, and then finally the market start trending in our direction. Okay, so now that this happened, now I must address low, high, low, high, low, high, low, high. Alright, so the market retraced into a deeper retracement. Boss, there is too much information. Download this video, rewatch it a few times. Download this lesson, rewatch it a few times. Okay, now that this was the market, you know, higher highs, higher lows, lower low, lower high, and now the market, so the stop loss on the market wave was up in here, the stop loss of the shortened downtrend was up in here. Now the market went into a deeper retracement. Can you see now why the stop loss, or comparing shortened trends to the market wave, trading the market wave is safer? Okay, statistically proven on all time frames. You are going to be stopped out less times on the market wave compared to the shortened trends. Why? Because the shortened trends are a structural part of the market wave. Shortened trends, lower lows, lower highs, lower lows, lower highs, retracement, higher highs, higher lows, higher highs, higher lows, extension, lower lows, lower highs, those are going to this price action, the market changing the short-term trends, it what makes the market wave. Does this make sense? So the market stops us out on the short-term trend, but the market wave pattern is still in place. So when this happens, we're going to wait for what? Another change in the short-term trend, right? Like high to low, low to high, high to low, low to high, low. Do we agree that the short-term trend changed again? So it was making higher highs, higher lows, higher highs, higher lows. Now it's making lower lows, lower highs, lower lows, lower highs. Alright, so here if I want, I can short the market in here, and I can put the stop loss not on the most recent high, on the previous high. Okay, just an example. Let's see how this is going to play out. And this would be a winner, right? 1 per 2. Okay, now just graphically, if this is €1, $1, $1 Bitcoin of risk, and clone, if this is 1 and clone, this is 2. Alright, so here this would be, this trade would be a winner. Okay, I hope you liked the lesson. I hope you've learned a lot. I know it's a lot of information, don't worry. Download the video, download the lesson, rewatch it a few times, study the charts, try to put this theory into the live charts. Try to chart correctly the market wave. Okay, try to chart correctly the short-term trends. Try to identify relevant highs and lows. Try to understand where you enter prematurely. Try to understand where you put the stop loss in the wrong place. I guarantee you, you are going to start to have less losers. We're not talking about making money yet. Forex course number 101, it's me trying to understand how this market works. Me, I mean you. You know, Forex course 101, it's how this market works. The rules and the concepts. I guarantee you, I promise you, if you can learn those rules and concepts and try to make sense of, oh, I was stopped there and there, but if I would have a stop loss in the appropriate, in the right place, the market would not stop me out. And I would have more winners and less losers. Okay? See you tomorrow in the next lesson. In conclusion, if you didn't receive the free yes, everything is in the free manual, you know, those concepts, everything is written in the free manual. Send me an email, it's for free. And if you want this one, the little book of trading secrets. If you want to understand why 90% of doctors, lawyers, movie stars, quantum physics, you know, accountants worldwide, why 90% of world population lose at trading, that's the book. Okay, it's for free for you, doesn't cost you a cent, but please visit to download, visit the website www.fxbossfx.com. Okay, see you back tomorrow. This is Mike. Thank you very much. See you tomorrow. Thank you. Bye bye.